Hi, everybody. This is AJ speaking. Today is Wednesday, December 18th, and as of speaking, Tesla share price is at $466. Um, I wanted to touch base with you to not only discuss what's ahead for Tesla, but I think to understand the current situation, it's important to also look at the last 5 years, what happened. There was a huge bull run. Then there was, let's call it a depression. And then we had this recent, very significant share price appreciation. And and I get a lot of comments from tons of different kinds of investors, small ones, large ones, very experienced ones, noobs. Um, Everybody's asking me the same question: is it time to trim? Should I exit? Swing trades, options, all the jazz. I think in all this, what I would call minutia, people often lose sort of the big picture, and this is why I wanted to talk about this. I make these videos very rarely, so this also shows you that this topic is quite important to me. So let's dive right into it. So this first slide is a very busy slide. This is what would be called like a compound chart because it comprises several charts in one, and I overlaid these very different metrics to basically show you in very much detail what actually happened. So when you look at this chart, and don't get overwhelmed by all the information on this chart. We go through it one by one, but picture, what does it show you? So first of all, the black line that you see here, that's Tesla's share price. You see here, for example, the peak in November 2021 at $414. This is the intraday high. And this chart, you see it looks a little funny because this is not a line chart. This is actually candlesticks. So it shows you all the highs and lows for each trading day. So this is the black line. Then you see the green line. The green line is S&P 500, which is also called the market in finance jargon, and it reflects the overall equity market performance. And in this chart, I show it as on a rebased basis. That means all index values are expressed as a percent of the starting value. I start the index from where this chart starts. This is end of June 2019, and as of yesterday, I'm using market data as of yesterday's close. You can see that the index or the S&P 500 has done 106%, so has more than doubled over this time period. Next, we're talking about this light blue line. This light blue line, and here you have the axis of that light blue line, is the PE ratio. And the final piece of this chart is this dark blue line. This dark blue line shows you the future development of the PE ratio if you kept the Tesla share price constant at $480 a share. It would quite quickly drop quite a lot. It would drop by early 2026 below 50. Tesla rarely ever trades below 50, only under huge stress, huge crisis, have we seen these low valuation levels. 50 is still a very high PE for most stocks, but keep in mind Tesla has the Elon premium, has the Elon Trump premium, has the Elon Rocketman premium, and whatever you want to call it. And as long as Elon is running a show at Tesla, especially not under a friendly president, we're not going to see trading levels this low. This means as earnings go up in 2025 and the Tesla premium persists, this will push the stock higher. Will we see pullbacks? Of course we will. It's never a straight line, even if last 2 weeks it looked like it is a straight line, but there will be pullback, but it's not a big deal. And this is where we should talk about sort of the past. When we now go over here, this starts middle of 2019, and you see how the Tesla share price increased and then dropped massively. You look at the green line and you see the drop was caused by a market-wide crash. This was the COVID crash. And then a lot of fortuitous circumstances, the S&P 500 inclusion, another stock split, quickly ramping vehicle production thanks to Shanghai, the prospect of Berlin coming online. This is what you see in this exploding share price in Tesla, very high vehicle margins driven by COVID anomalies. I've talked about this stuff a lot before. So this was like an exuberant time, not only for Tesla, but also the global automotive industry. And EV adoption looked like it would happen very quickly, yada, yada, yada. So a lot of positive things came together. Plus, governments globally pump money into the economies to stabilize their economies because of COVID lockdowns. You see not only Tesla moved up a lot, but also the index kind of exploded, and then we got into this bubble territory because when you look at now the light blue line, you see that the PE ratio reached like crazy levels. For example, Tesla briefly almost touched around about 180 times, which is crazy high. And then, of course, it deflated for a bunch of reasons. Stock market was still going strong, and then Tesla entered another bull run after what I would describe a fairly short pullback to then reach the, up until very recently, all-time high of $414 in November 2021. And then inflation hit. And with inflation, the central bank around the world, not only the Fed, were forced to very quickly increase interest rates because almost nobody had it on the radar. It hit everybody kind of by surprise. And then this kind of all of a sudden stopped the party. The party was a government flooding the market with money, handing out COVID checks, people working from home, being slightly underemployed and thus doing more trading, huge equity flows. This created all this perfect, let's call it bubble. And then in Tesla's case, Tesla not only got hit by a general sort of depression in the market. As you can see, the S&P 500, the green line, went down quite a bit. But at the same time, Elon, just as all this stuff was about to happen, Elon probably got a little unlucky with timing, or maybe it was basically probably he felt like this was like the last moment he can do it, but ultimately he decided to go after Twitter. Was a very messy situation. Those who follow the situation closely might remember Twitter was totally overpriced, was full with bots. Elon at some point wanted to pull out. We don't know, perhaps because of negotiation tactics, whatever. Judge, also the same judge who forced him to the judge who rescinded his comp packets, she was the same judge who also then basically forced him to buy Twitter. Anyway, we're not going to go into detail here, but this forced Elon then to sell down a very large share of Tesla stock, and this amplified the pressure because we just came out of a Tesla bubble. As you can see by the P, we went from excess money supply into the Fed substantially increasing interest rates, and you can see this by this chart down here. This chart down here I haven't talked about yet is the Fed's funds rate, and you can see here's the bubble, and these charts are perfectly aligned. So you can see here's the bubble, and shortly after the bubble, Fed started raising rates quite a bit, quite quickly, almost at an unprecedented rate, and this drove the market down. Of course, drove Tesla down. On top of the negative market sentiment, Elon selling drove the stock down. On top of that, we had a slowdown in global auto, and by slowdown, I'm not meaning I don't mean like vehicle sales collapsed or something. No, there was the exuberant time in auto was over as channels became fuller and fuller. And I'm not going to go too much into detail. I covered this in crazy detail in my research, but the bottom line is in 2023, the auto market became extremely competitive because people were used to their high margins, having strong sales, etc. And all of a sudden, the competition increased enormously. And then we had late 2022, the start of global price wars in the auto industry. And since that point, it just increased every quarter. On top of that, we had significantly increasing interest rates that made auto purchases very, very expensive. So long story short, Tesla share price was hit by three main effects: the general overall negative market environment, Elon's purchase of Twitter, and third, a massive increase in competition, which then led to a slowdown in growth, led to margin erosion, which was then the reason why the multiple was so crazy high. And because of all this stuff, then you see the multiple dropping because the sentiment then changed from very bullish, which is represented by very high PE ratio, to very negative. And you can see at this point, end of 2022, the PE ratio actually reached basically a long time low for Tesla at around, call it 30. That is here, this axis shows you the blue lines level. And then Tesla's earnings started to improve. The stock started to trade up again, and then we got sort of an interim peak, and this was middle of 2023. But this was still a bit early. Global auto price was still in full effect. A slight slowing in global EV adoption, partially driven by some large countries withdrawing incentives. So a difficult time, was kind of a transition time. Also, FSD progress was slower than what people had expected in 2021. So there was like also a perfect storm. So this is highlighted here in this slightly red bubble. Market was recovering, market was going up. And then, of course, we come to 2024, and 2024 basically kind of started with a disaster. Berlin had to shut down. There was an arson attack. Tesla had logistical problems, led to a surprise miss of the significant surprise miss in 1Q deliveries. Numbers overall didn't look that great. And then a judge taking Elon's comp away, a lot of negativity, and I'm sure I missed a few things. Tesla then started to slowly recover after shareholders approved yet again Elon's compensation package, which drove a significant rally in the share price. Then we had 2Q. 2Q was kind of you might almost call it a watershed moment for Tesla in 2024. 2Q was the quarter where Tesla's energy storage business more than doubled sequentially, which shocked the entire market, caused a rally. You see the spike here. However, the stock was quickly brought down by some negative news. And then we basically had the ugly sort of presidential election, Elon being political. A lot of people criticized him, friends and foes alike. But anyways, ultimately was the right call. Trump won, and then basically the stock took off. So this is kind of a quick recap of sort of the history and key items. Of course, I have not touched on everything. Otherwise, this would be like a probably 5-hour video. But the bottom line is there was very strong growth, strong margins, good market, led to kind of Tesla getting ahead of itself. Then we had 3 major negative factors coming all together onto the stock, deflated stock massively. And now we have this major run up. And now everybody's asking, what shall I do? Shall I trim? Shall I exit? What shall I do? And I'd argue, based on this dark blue line, based on my EPS outlook, you're probably better off just sitting on your chairs and not trimming, not exiting, because 2025 will be quite wild. This earnings forecast is highly detailed, and I think on highly sensible assumptions. There's nothing crazy in here. There's actually very, very little FSD in here. And this is a combination of various factors, and we touch on these briefly on this slide. So this is the revenue outlook for Tesla. You see it down here, 2023, 2024, and then you see the forecast quarters, and you see the 13 revenue lines of Tesla's as Tesla reports them now, or as they will be emerging very soon in the future. I just go very quickly through this because I already covered this on another video. So Tesla's main revenue line will still be the 3 and Y line. S and X, you can see tiny, almost a rounding error. Cybertruck will still be fine, and it will grow into a needle-moving revenue line. The next gen, what I call it here, is the upcoming new smaller vehicle. You also see this is not crazy revenue that I'm factoring in. Semi is only something that kicks in from 2026, relatively modestly. Credit sales, they're still reflected in my forecast. They might go away, but not in end of this world. Then auto leasing recovering slightly on lower interest rates. E&S is energy and storage. This is the story of 2025 because energy storage is significantly higher margin than auto. Hence, every dollar of additional storage revenue is a lot more worth than a dollar of auto revenue. Then we talk about robotics. Robotics is Optimus. Again, there is no revenue in 2025. Optimus to kick in only from 2026. Then we have RH, which is ride-hailing customer, which is the ride-hailing revenue cut Tesla receives from Tesla owners, contributing their vehicle to a Tesla-run ride-hailing network. All the, at least hardware forecasts, should be able to do that. I use very conservative participation rate, but again, this is also just a story, just starting in 2026. And then S&O is service and other, and this is just the most persistently growing segment in terms of revenue Tesla has. So there's nothing here that is like a major outlier or something crazy. It's just there's a lot of stuff that starts to kick in, and once you add everything together, you get to a quite wild growth now, because Tesla is not an auto company. Tesla has all these other businesses, and they all start to kick in. But this is the big story, and what you have to understand when you look at the year end 2025. So this dark blue line here that comes down so much, this PE ratio, because the earnings go up. The earnings number behind it is not the earnings number from 2025, it's what comes in 2026. So this is the key insight here. And that's why we will see throughout 2025 the PE ratio come down. And then for for investors that are right now nervous or wavering or have trimmed, etc., they will all come back. And a lot of them will come back at probably much higher prices because there's just too much positive headline news flow up ahead. For example, early January, CES starts, everybody will talk about AI. This gives naturally the AI names a boost. Tesla is already seen as an AI name. 20th of January, Trump's inauguration. Probably Elon shows up. He might even give a 1-minute speech, whatever. Elon will be front and center. This will also be at least neutral, if not meaningfully positive for the stock. So there's just too much good stuff coming in. Then obviously we are probably just weeks or a few months away from the first leaked lower cost Tesla pictures to drop on the internet at some point. First videos. We know the new Model Y Juniper is coming, giving for the first time in really several years very many happy Model Y owners actually the first reason to switch car. It will have all the upgrades the new Model 3 has. A lot of people, especially in the warmer climates, they will switch to the new Model Y just because it has ventilated seats. It wasn't available before, and it it looks new. The current Model Y simply looks old. It still looks okay, but it's old. Let's face it. And so there are a lot of reasons that the killer product Tesla sells right now will see increased sales. So this will carry the stock for some time, and then we will see, once sort of this effect wears off a bit, we will see increasingly FSD to kick in. And I'm just basically, it's just the tip of the iceberg. We can also talk about, Shanghai mega pack production and a lot of other things. But and I've talked about this before, so I try to keep it a bit short. Long story short, there's so much good stuff coming up that, number one, for Tesla to materially pull back, you have to have a black swan. Black swan can happen tomorrow, next week, next month, we don't know, or it might not happen a material one this upcoming quarter, and the stock just keeps trading away from you. That's why I think it's stupid to take that risk, because I've seen so many people, they trimmed at 270, they trimmed at 300, they almost exited at 350, and now they are really not happy. And for what? To invest in some shitty small cap high risk meme stock right now? No, I don't like those risks. I rather stick with a large cap where I have like a clear path ahead, that is run by Elon freaking Musk, and who is like best buddy with POTUS, then gambling basically. So this is basically the key message I want to leave you with. This will be a great investment, even at current levels. Without crazy assumptions, you can see a 50% upside over the next 12 months. In days, if robotics works out better than expected, again, robotics in my focus is only end of 2026 story, slightly to kick in. There's even more upside. So overall, I'm still very bullish on Tesla, even at these prices. And I will wrap this up now. Just keep the big picture in mind. With that, Merry Christmas.